Welcome to this month's Market Trends Report, where we give you sort of a snapshot of what the market's doing, not only nationally, but also locally. And one thing that we've definitely seen, that we haven't seen for the last several years, is the seasonality curve, the bell curve. And what I mean by that is we're now, with the market slowing down a little bit, we're starting to see different trends that we saw 3, 4, and 5 years ago every year. And that would be that you're going to hit a peak in the summer of where we're busy, but also you're going to start to see certain slowdowns. An example, here in July, we've had a really busy month in July. We anticipate in the next 30 days or so, we're going to have a little bit of a slowdown when kids go back to school, when kids could return to college. Then we'll have another surge in the market until we get the first snowfly sometime in October. Again, that seasonality curve where things slow down a little bit in the holidays, but then they peak back up in the other times where the weather's a little nicer, a little easier to move. What we have also witnessed is 3 years of really a market of really high demand. A high demand of need of housing, low interest rates really fueling that and making it more affordable to own than buy. Now those things have leveled out a little bit, and we're starting to get a vision of a normal market. And really, for us, it's really sharing with our clients and friends realistic expectations. What can we expect of the market moving forward? And today's reality is the market is starting to normalize. We will have seasonality trends where there'll be times where we're slow, but there were times where we're busy. Prices are continuing to rebound. We softened a little bit. They didn't drop, but we softened. So if you're selling your home, you need to sell it and price it right. You need to price it according to the current market and not always anticipate the upswing of, the market will catch up to me. You need to price it at the market value. The other thing is that we're not crashing. The market isn't crashing because our inventory is still very low. New listings are declining. We don't have as many new listings coming on the market as we did a year ago, 2 years ago. But we see event-based buying and selling. We know that people's leases expire and they decide to make the next step to buy a home. We know people are getting relocated. We know there's estate sales where people maybe pass away and their heirs inherit the home. So we know that people, unfortunately, sometimes get a divorce. Sometimes they get married. Sometimes they have kids and they outgrow their home. So again, very event-based buying and selling. But the biggest challenge is affordability, because our prices have continued to go up and up. The affordability has been a challenge and it'll continue to be a challenge. New construction is the key for us to continue to get out of this inventory issue. So we'll continue to see more and more new construction and more developments that are going to continue to hit. Also, what we've seen is in anticipation of continuing to see an active summer market, is we have a better qualified buyer. On average right now, the average buyer has a FICO score of 720 or above, which is quite a bit higher than what we've seen historically, where we've seen it in the mid to high 600s. So the other thing, interest rates. The new norm is now that 6 to 7% interest rate, which is still a great rate, not compared to 3 and 4 of where we were at historical lows, but 6 to 7% is probably going to be the norm going forward. And we're also seeing lenders that are creating new loan programs to accommodate buyers, giving them the option to potentially refinance in the next year or two at a much discounted rate if rates were to drop. So there's definitely things out there that the lenders are trying to accommodate buyers as well, to put their minds at ease. But again, going forward, will we see potentially high 5s? Maybe. They are predicting, because when rates did go up to 7, that it priced a lot of people out of the market. They anticipate that if rates were to come down into the high 5s, there'll be a large bubble of buyers, of millennials, that will now be able to be requalified into the market. And they fear that that's going to be another surge, which will then deplete our inventory again and cause another feeding frenzy. So we'll see how that all plays out. So what we say, and we're telling our clients is if you're thinking of buying now, don't wait for rates to come down if you're comfortable with the payment now, because you have the option to refinance at a small price. Take advantage of the prices now on the home prices now, and then you can go in also have the option to refinance later. Because if rates do drop, you'll not be the only one that's going to be jumping on that bus. A lot of other people will. So what we are seeing is the highest demand right now is that 250 to 500,000 range. That's the most affordable sweet spot in the market. So that's where the highest demand is. As you go higher in values, you'll see that the market slow down a little bit. A lot of that is because Some of the people that are at 750 million, 2 million, they don't necessarily have to move. They may move for the right deal, but they don't have to move. So I think a lot of them are on the fence, sitting and watching and trying to figure out, okay, where's the market going, and maybe stepping back a little bit and waiting a little bit, so because time is on their hand versus the more the affordable range. So the other thing is in our market, we're starting to see a lot of agents and lenders get out of the market because there's a surplus of agents and a surplus of lenders. Why do I share that? I share that because it is really important when you're buying or selling a home, getting a loan, to really work with somebody who's been in the business and knows their trade. It takes a lot more than just a sign in a lockbox to get a home sold nowadays, and it takes a lot more than it takes a lot more experience to negotiate a win-win contract for a buyer as well. So make sure you do your due diligence and work with somebody who's been around and who's navigated the tough waters. We've also included our front range numbers as well. So you'll be able to see the numbers here in Larimer, Weld County, Larimer County. There's currently 851 homes currently on the market. Last month, 435 actually sold. Average days on market, average days on market, 52 days on market, with 668 new listings last month. But we went from 14 days average days on market a year ago, 52 days average time frame. Weld County, 839 homes currently on the market, 485 actually sold in June, with average sales price at $562. So still, again, continuing to increase. Average days on the market, 49 days, and 558 homes that hit the market in June as well. So as always, however we can help you out, we are your real estate experts for Northern Colorado. As we always tell everyone, when experience matters is when you call the Kevin Schumacher team. Appreciate all the referrals, appreciate your loyalty, and we'll look forward to talking to you next month.